Welcome to etvFutures.com. It's Tuesday, March 11th. I'm Remy Hokie for your Commodities Recap. In energy, NYMEX crude oil futures closed out the session at yet another record high. Overnight crude oil futures nearly hit $110 a barrel. In today's volatile trading session, crude was weaker after the Federal Reserve's latest liquidity move. This came as the U.S. dollar strengthened against the majors. The Federal Reserve announced that it will pump $200 billion into the financial markets in coordination with other central banks. Meanwhile, the market is looking ahead to tomorrow's EIA petroleum supply data. At the end of today's session, April crude gained 85 cents to close at 108.75 a barrel. In other energy futures, April reformulated gasoline gained 1.12 cents to end at $2.7261 a gallon. April heating oil fell 2.23 cents to close at $2.9957 a gallon. And April nat gas fell 2.4 cents to close at $10 per million BTU. And in metals, gold futures closed up on the day with the April contract up $4.20, ending at $976 an ounce. This afternoon, we're joined by Derek Frey, head trader at ONF Futures and Options. He'll weigh in on the Fed's latest move and what this means for crude oil prices.
Okay, recapping the action we saw in the energy and metal sectors today, we've seen really an incredible day, and I want to start out these comments by kind of taking a moment and talking about what we've seen in terms of central bank interventions in the last, not even 12 hours. I'm sure most of you have seen the story now, but the bottom line is that the central banks around the world, at least the major ones, have pretty much all come together in an effort and are all but literally joining hands to support the dollar. Now, that doesn't necessarily mean that the dollar is going to, start rallying like gangbusters, although it could. But what it should mean, and what they're obviously trying to accomplish, is to put a floor in on the dollar. It's in no one's best interest around the world. I don't care what side of the pond you're sitting on, whether it's in Europe, in Asia, or in America. We've reached a point now in terms of the devaluation of the dollar where it's no longer a good thing. It's now becoming more of a hassle and more of a problem for the whole world, for that matter, frankly, than any amount of devaluation is helping us pay back our debt. So, you're seeing the ECB step in, you're seeing the BOE, the BOJ, all the major central banks, as I mentioned. Don't for a second be confused and think that they're doing this in an effort to help out the dollar or help the United States. They're doing it for the same reason that anybody does anything, and that's selfish reasons. Like I said, they're doing it because the weakening dollar is hurting them, not because they're trying to help the dollar. So just don't get confused by that one. But bottom line is that this is a pretty big sea change. We're going to need to retest the lows on the dollar just like we retested the lows on the stock market and bounced off of those today. So we need to see another retest of this low. Like I said, we'll probably see that either later this week or next week. But if once we retest and if those lows hold, I would really look for a significant bounce to come out of the dollar. It's been a one-way trade for the better part of well over a year now in terms of being short the dollar. So there will be a lot of short covering and unwinding to come if, in fact, we do begin to bounce. And it is a little early to outright call a reversal yet, but this kind of action is not insignificant. It's actually very creative. I'm quite impressed. I've not spoken very highly, frankly, of Mr. Bernanke and company, and this doesn't completely change that, but I'm definitely impressed by the creativity in which they've attacked this problem. I think they've obviously come to realize that continually lowering the interest rates is not going to solve the problem and is, more than anything, causing runaway inflation. So overall, look for, this should be the turn that starts to pull commodities back. Gold already started to see a pullback. Crude oil has been trying to fight it. I would look for I would look for gold to pull back well below 950, possibly back all the way to 900, but definitely below 950 in the near term. Crude oil, too, I wrote yesterday in the newsletter that we would likely see a blow-off to about 110. We've seen just about that hit today already, 109 and change at least. And I would expect to see a reversal coming there shortly as well. There's more downside risk than upside potential in crude oil in the short term. So we're definitely looking for a run back below triple digits, back below 100, to take shape. Probably not this week, but at some point in the latter half of this month, we would expect to see crude oil, like I said, back in double digits rather than in these triple digits. So overall, I think a pretty good day, very good day for the dollar, and good day for the stock market. And look for, even though I am a commodities trader, I frankly am feeling the pain of all this inflation as well. I'd like to see commodities pull back as a whole as well. It would be a good thing overall for the economy, not just ours, but the whole global economy. So let's see if we can get an actual pullback here and try to slow this runaway inflation.
That was Derek Frey, head trader at etvFutures and Options, with his commodities commentary. And that's it for your commodities recap. I'm Remy Hokie. Join us later this afternoon, 4 p.m. exchange, right here on etvFutures.com.